Whether you're a traditional investor or crypto native investor looking for gold, you're going to love this interview with nGRND CEO Lisa Wilson. At $4,870 as of this morning, gold is trading all-time highs and doesn't appear to be stopping anytime soon. Wall Street gold analysts are averaging forecasts for 2026 of $5,180, with JP Morgan forecasting prices to keep rising towards 5,400 in 2027. This has investors all over the world looking to make investments in gold or gold companies, the gold complex, let's say, but many still hesitate due to the environmental impacts of gold mining. Enter nGRND, who's looking to become the world's biggest resource company that doesn't mine. For centuries, owning gold meant digging it out of the earth. The process has always been costly, slow, environmentally destructive. Today, with environmental accountability converging with tokenization and the rise in demand for hard assets, a new question is emerging. What if gold could create value without being mined at all? That's the premise behind nGRND, who's building a new and powerful category of gold ownership. And here to talk about it is Professor Lisa Wilson, the CEO. Lisa, welcome to Agoracom.
Thanks very much, George. I'm looking forward to the discussion. It is an exciting day because today is a milestone event. Gold is hedging towards that resistance point of 5,000. It could actually get there today. So a really important day to have this interview.
Yeah, maybe we're hitting two milestones at once. The first time you're on Agoracom and gold hitting that $5,000 number. So I said my piece in the intro to try and give people a 30,000 foot picture of what you guys are doing. But given how new and exciting your model is, you're not Lisa Wilson gold mining, where everyone say, okay, we know what she's doing. This is a new and exciting model. How do you describe the company in layman's terms and simple terms to get people to really understand what you're doing?
Brilliant question. Look, really, for me, it's an nGRND Inc. or nGRND Incorporated, the company that's actually the product sponsor of our gold token and also our other programs, really does one thing. We go out to the globally available known mineral resources, which in the main are held by the junior developers or the exploration companies, and the very vast majority of those actually are based in Canada.
Right.
We go out to that global market and we acquire the known verified mineral resources of in-situ, in-ground gold and the property owners and the rights owners of those resources. Our role is to obtain those assets from those mining companies. And take over those assets, whether we purchase them, whether we take streaming agreements, whether we take various types of definitive agreements, but procure those assets for a minimum of 30 years. The other two tasks that we do is that we sponsor the development of a real world asset called nGRND Inc. Gold token or nGRND gold token, and that's produced and generated and issued and sold by a regulated entity by the Virtual Assets Regulating Authority of Dubai. So we don't issue it. It's done at arm's length by a regulated body, but we do the development sponsorship and the development of the tokenomics model for them. And the other task that we do is that we sponsor the development of ESG and carbon origination programs as an alternative land use on the site programs that have the known mineral resources. So in other words, through avoided mining, we do something different with the land, but again, we don't do that. We do that at arm's length, and we get an independent body called Carbon Planet that does the origination for us. Other side is we do the same thing. We get a regulated body to issue and generate and sell and allocate our nGRND gold token. And that gold token represents a real world asset of 1 ounce of the gold that we have procured in our site programs. So really, nGRND Inc. is the machine that makes it all work. We go out to the world, find the resources that are verified, pull them together, and find an alternative way of valuing and monetizing that gold in ground.
Okay, and now people at home are going to be watching this or listening to this and saying, all right, Georgecom Gold doesn't exist. I always use that as a placeholder because so nobody goes out there search for Georgecom Gold. So here I am. I'm George Com Gold. I've got this project in Greece. I've got known gold in the ground, and typically, what I want to do, my instinct, 100% is I got to get that gold out, and I got to sell it, and I
Mhm.
got now along comes you and nGRND, right? What's the value proposition for me, for those who own these known gold resources in the ground? What's the value proposition to me to keeping it there, which is completely against my instincts?
It is, but you've got to bear in mind the nature of the industry. So the known mineral resources. So if you look at what there's above ground gold and there's below ground or in situ in ground gold. And currently in the world, there's about 6 billion ounces, or not quite, but just under 6 billion ounces of known in situ mineral resource classified gold in ground remaining. It's a finite resource. And that vast majority sits with junior developers and is in essence really a stranded asset because it might sound great that they've got this gold and there's 6 billion ounces of it sitting there in ground. But generally, if it's classified as a mineral resource, it hasn't been evaluated to be economically viable to get it out of the ground. And that's for a variety of reasons. And I say currently not economically viable. So you've got to take into account that it takes somewhere between 7 to 20 years to actually go from discovery to actually extraction. You've got to have a vast capital resource to build a mine. You've actually got to have all the environmental studies done and get approvals. You've got to spend a lot of money to actually go from mineral resource to be reclassified as a reserve and then go to extraction. That's a 20-year process. And for many of these properties, they are uneconomically viable because it could be because of an environmental reason. It could be sitting in an area that's extremely environmentally sensitive, and the landowners, the traditional landowners, may not want it to be mined. It may well be that it's deep or it's dispersed for a variety of reasons. The gold exists, but it's difficult to get out of the ground under the current economic circumstances. So if you're looking at those who own those rights of verified known ground in situ gold, it really is a stranded asset and it's sitting there unmonetized. If they want to sell those properties, the big majors and the royalty and streaming companies, will certainly assist in
He's
that
on the dollar.
regard, but they'll give them, that rock bottom price. They'll basically divide the capitalization of the company by the ounces and give them somewhere between 8 to 10 if they're lucky. And if it's on the higher end of value, they might be lucky to get somewhere between $60 to $90 an ounce. That's still a stranded asset. They've still got the same headache. They can't get it out of the ground. So, from our perspective, gold is gold. If it's above ground or in the ground, it's still the same asset quality. It still has the same properties. But using the new economic model that we've developed and new technologies and new thinking around a number of asset classes, we can monetize it and leave it in the ground. It doesn't need to go anywhere. So it can stay there. And I actually I always like analogies when I do this because sometimes people can understand this better. If you think about the fact that the gold is still in the ground and I can still use that as a store of value, I don't have to see it, I don't have to feel it, I don't have to touch it, but I know it's there
Ask
and
you that.
I can still use it for every property except jewelry. I can't wear it, but I can use it as a store of value and I can use it for economic stability, etc. I want to take listeners and viewers' minds to the fact, look at fiat. Every time you look at your phone and your digital bank account, you might see $1 million that you might have, or 100,000, or whatever you've got in your bank account, corporate, whatever, sitting there. You don't see that money. You don't physically see that cash sitting there, but we still recognize that as a store of value and a means of exchange and all the things that we use money for. This is no different. It's like gold sitting in our bank account that we can't see, but we can still use it for absolutely everything except wear it as jewelry. And there's enough gold above ground that we can use for jewelry. We don't need in-ground gold for that purpose.
Yeah, you're not trying to solve a jewelry scarcity issue. I'll tell you why I love this, because for the problems that you outlined a couple minutes ago, so many small cap companies end up dying on the vine.
Mm.
They've done the hard work, they find the gold, but then it's really capital intensive, all these challenges. And then you just have these big mining companies come along to George Com Gold and say, well, George, you're out of options. So here's pennies on the dollar, like you said. Here's crumbs. And investors and companies end up so dissatisfied, and value only flows to the few. So now I've got an alternative. Right. So
Mhm.
now I've got, a big mega cap gold company offer me, if I'm lucky, like you're saying, 50, $60 per ounce of gold to have in the ground. Right.
Mhm.
You come along now, in ground comes along now. I've got 1 million ounces. I've got 1 million ounces of gold in the ground. What do the economics look like if I'm dealing with in ground to keep it in the ground rather than with the major?
So, as it stands right now, if I'm that in-ground company that has gold in ground, the only way really I can monetize that and even do more exploration is to go out to royalty and streaming companies or sell. Other than that, it sits there as a stranded asset. For us,
Yeah.
we go to the mining company and say, right, we will offer you an alternative. We'll give you the best part of 250% more than what you would normally get. So we'll give them somewhere around, at the current price of gold as it stands at the moment, somewhere around $210 an ounce. But
Wow.
for that, what we want to do is we want to take over the rights of your land and the rights of everything that's in it. In other words, all your mineral rights. And we're going to utilize that volume of gold, and depending on the classification of the verification, whether it's inferred, indicated, or measured, and we take different percentages of that, because obviously the probability and likelihood of expectation of the gold's actually existing varies, the trust level varies, but we'll take a volume of that gold and we'll hand that over to our issuer of our in-ground gold token, and they will back each of those tokens as a real world asset physically by one of those ounces of the gold that we've taken from your property and have controlled from your property. And so, of course, the real world asset, the in-ground gold token, represents that gold that is in the ground. It is physically backed by an ounce of that gold, which is the definition of a real world asset. And so the in-ground investor obviously gets the growth benefit and so forth. But the property owner in return gets $210 an ounce, and they still own the land, and they don't have a headache of having a stranded asset and trying to get it to a further verification, or it might be inferred and they want to get it indicated and then they want to get it to measured. They have the
So they
capital to
can
do
keep
that.
drilling. They can keep doing their work
They
with
can
that
keep
money. They
drilling.
they don't just
They
sit back
don't
and start.
stop. They can take, let's just say they've got 1 million ounces and it's currently sitting as inferred. They can go out and drill, provided it's environmentally friendly with our carbon generator who's looking after the land as a custodian of the land, if you like. They will go out and actually, in actual fact, as technology is getting better, they won't actually have to drill eventually. They'll be using drone technologies and all sorts of technologies to do that. But they can take their 1 million ounces and instead of it being inferred, they can take it up to a measured level and actually monetize more of those ounces as the more confidence and trust and probability of likelihood increases on that land. So they keep going. So our development companies and junior mining companies and those who own these resources now have cash on their books. They are no longer beholden to the royalty and streaming companies and the big majors to buy them to get cash on their
Love it.
books. They can make special distributions and special dividend payments to their shareholders. They've actually got cash on their books, and that is the only way that these companies can actually generate a greater return for the assets that they've got. But there's a big but, and this is the big but, and this is a really, really smart part of this economic model, and probably part of the reason why I get so excited, because this has brought all the threads of my career together. That if we don't mine that site, we're not just going to leave it sitting there, because the other most valuable uncorrelated asset on this planet is carbon and ESG assets. And people just don't understand the value of these. They take their mind to one place I'm taking them to another. This is an uncorrelated asset class growing faster than anything else on the planet, faster than gold, faster than Bitcoin, faster than anything else, and that's carbon. So if we've got a site where we don't mine, in other words, called avoided mining, on every site that we've got, we can at least generate carbon from one carbon offset standard methodology. And we have an independent carbon originator and developer who'll do that for us. But it doesn't stop there because it's not just one. It could be that one of these mines sits in Alaska and up above might be, the rarest animal on the planet, or it could be where there's a salmon run, or there could be where there's First Nation peoples own this land. We have a multitude of methodologies, greater than 540, where we can create new revenue generating programs on that land, alternative land use.
Wow.
Now, there's
So you
also
get
another one. There's another one. Brownfield sites are even more amazing because we can go and clean up dirty tailings, dirty environmental sites, etc. They are like, they are like our gold in carbon, to be able to do that. But at the same time, the gold is monetized. So it's the best of both worlds. We've got
so
two asset classes as a result.
you monetize the gold, and then you've got the carbon credit side, and you've got hundreds of way to get the carbon to
Correct.
monetize the carbon credits. The simplest one, I'm assuming, is okay, George, as a result of you not mining for the next 20 years, you can put a value on that and sell those. So what do you does that get added
Absolutely.
to the value of the token? Does it get sold separately? How does that part work?
Completely separately, because the two must be kept separate because the in-ground gold token is a commodity token. It is not a security, it is a commodity token, a real world asset commodity token.
Right.
And the carbon is a completely separate, different program. So it generates its own revenues from the sale of carbon credits. We might, in fact, put a waste to energy plant or a solar plant or anything else on the land, which will generate revenue. Collectively, that whole revenue, whether it be from carbon credits, from electricity sale, from alternative land use, generates revenue. And Carbon Planet distributes that revenue back to the in-ground gold token holders as a different form of yield, if
Wow.
you like. We put it on a MasterCard for our token holders, and they physically get cash from those revenue generating properties. Now, make absolutely no mistake.
Unbelievable, Lisa.
So think about this. You think gold is worth a lot at the moment and it's going up, a few percent a day, and we're edging towards 5,000 USD. Let me give you an example about some of the carbon assets. A carbon asset as an investment grade asset, some of these carbon credits have a projected and predicted growth. And it's not us saying this is S&P, Bloomberg, MSCI, Clearview Markets, all the institutional players of in the next 5 years, somewhere between 240 and 711% growth. So
That's going to
that
outpace almost. That's going to outpace pretty much every asset on the planet by
it
far.
already is. But most people view, and this is a real mind shift for our site programs, because for the first time, instead of seeing ESG and climate as a cost, they're going to start to see it as an asset. Because at the moment, even the big majors, the senior ones and senior players and
Yep.
tier ones, as well as the junior players, the cost of environmental attributes around mining, and especially gold, because it is one of the most environmentally damaging types of mining on the planet. They can't afford to do some of the requirements that they need to do. They also need to all report scope 1, 2, and 3 emissions. In other words, how much carbon they produce. It's costly. They're actually going out to streaming and royalty companies and taking advances to pay for just ESG. We take that headache away. If you're a brownfield site, your bonds and all of those, we clean up your site and start paying you for your land that you have a huge headache from. It's like a migraine, really, not a headache. And in terms of the juniors, they don't have to pay that. They've got capital and they're generating revenue from climate. So this is a mindset where we're valuing those assets in the ground, putting cash on their balance sheet for that gold. Investors in the in-ground gold token benefit from the value of the growth of the token and the security that's backed. And of course, everybody generates revenues and distributions from the other alternative land use. So it is quite extraordinary.
So coming from someone who's been in this business for almost 30 years, I wouldn't be surprised if I had a flux capacitor. I go in the future when this is on YouTube and someone's watching and listening to this saying, okay, this almost sounds too good to be true. So question, what's the response been like? So in theory, I mean, we're talking about, and maybe it's already practical in use, but in theory, this sounds fantastic. What has the response been like when you go to George of George Com Gold and David of David Gold and these and what's the response? So do they like it? Do they jump all over it? Do they not believe it? Because this is so brand new and so exciting compared to what's what the status quo, which has been crumbs for all these years. What kind of response are you getting, and are you getting companies on board?
Put it this way. Before we even got out of stealth mode, we had one LOI, letter of agreement, letter of intent to take over a property before we'd even entered the market. We at this stage currently have surpassed our 2029 budgets for mineral ounces, and we're only actually just starting to come out of stealth mode. That will tell you the popularity of what we're doing. But I need to add a disclaimer to that, and that's really what sets us apart and why now. Because many would argue, is it because of the price of gold? The answer is no. It's not because of the price of gold currently that's creating this perfect storm. It's because of the fact that there is new technology available for us to create real world assets as tokenized, but most importantly, in a regulated architecture. So prior to this, there have been other attempts to try and tokenize gold, and many have failed. And the reason that they've done that is probably predominantly two reasons. One, they've focused on every ounce of in-ground gold that's available, and we are not. We are focusing on known, verified mineral resources at minimum, and of course, reserves that remain if it's in a brownfield site. And they have to be verified. We're after all the definitive agreements and all the I's that are dotted and T's crossed. We are not mucking around. It's all verified by a 43101 or a JORC or a SAMREC or wherever it might be in the world. The second part of that is the real world asset part. Up until now, real world assets have been functioning in a fairly non-regulated space. Everybody knows that 2026 is the year of the explosion of real world assets. And for those that are listening, it means that a token is literally physically backed for security by something that does exist and has to be verified as existing. But in-ground is using the first licensed VARA regulated entity out of the UAE, TokenVest, to do our tokenization. So we sponsor them. They are the issuer. It's a regulated market. This is a completely different story to an unregulated sort of cowboy market. And so it opens up our investor base to central banks, to institutions, to professional investors,
Really?
etc. Yeah. So now remember that currently the volume of people and professional investors and central banks and so forth, they're already investing in ETFs. They're already investing in gold tokens for physical gold, e.g. by HSBC, for example. But the mind shift to be able to do that of in-ground gold is very small. And so our response by program holders has been quite profound. So much for the time off between Christmas and New Year, because I don't think I've ever worked as many hours as I have in that time, because we've got site owners coming to us who are saying, we for the first time can actually monetize our assets and not be beholden to not having money to go out and further explore and so forth. And like you, George, I've had a career in mining of 40 years. The big majors, everybody can tell I'm Australian. So the big majors in Australia, the Xstratas, the BHPs, the Newmonts, the Newcrests, the Barricks, the lot. I know how hard it is for these mining companies to generate. People think, oh, it's $5,000 an ounce. But 30%, 30 to 40, even more than that, probably 50% now is actually a cost of extraction. And it takes a long time. So this is a new world. This is a new world we're creating, apart from, of course, the incredible benefits that we bring from the environmental and climate restoration that we do for the land. So we better the world in a better way because we make sure we don't damage the land, or we improve the land back to what it used to be. We make sure we revenue generate for our site program owners from monetising the gold, but also, significant yields from the investment class assets that come out of alternative land use.
I'm really excited about what you talked about there with the fact that the token is going to be sitting on a VARA regulated institutional grade token exchange,
Mhm.
which is token best at the end of the day. Because I was going to ask you, I was going to play devil's advocate. I was going to say, Lisa, where are you going to find the money to pay George Calm Gold 210 dollars, ballpark, you use an ounce for the gold I have in the ground? That has to come from somewhere. And I first thought, is it going to come from individual? Because up until now, a lot of real world asset tokenization, like you're saying, has been gray market kind of. We've seen a couple of companies shut down because they went in and marketed these things, and then securities commissions literally shut them down. So you've got the supply side on lock. It sounds like you're expecting to have a certain amount of ounces in 2026, and you've already hit your 2029 numbers. So that's great. And maybe not even a surprise to most people, because there are a lot of resources in the ground that are uneconomic and they can't get them out. How is the reaction from the other side? And I know that's not necessarily you, that's the issuer, but have you had feedback from sovereign funds or family offices or big funds and big high net worth investors who would have an interest in buying the token and therefore being able to fund the whole, because you need the money to come from somewhere? How's the response on that side?
Just as strong. So I had just to fill people in, over the last 3 years, I've worked with regulators in Zurich and Switzerland to list and develop the world's first actively managed certificate for investment grade carbon assets. It's all obviously underpinned by blockchain technologies and so forth. And so I've worked in this regulated space for the last 3 years in terms of convincing people and convincing our regulators of what these new assets and so forth look like. So the regulated space to me is a well understood space in these financial services products. VARA is headed by, the person who wrote the regulations for VARA is a fellow by the name of Scott Veal, who happens also to be another Australian, ex-DLA Piper. And he was asked by VARA, would you please create the first entity so we can produce the first licensed regulated authority? That token based entity has access through exchanges regulated architecture for 2.6 billion people around the world. And that, by the way, is before we've had conversations with the central banks and the institutional players. I mentioned it to one of our entities that also works with us. It's the world's largest commodity and precious metal brokerage company in the world. I mentioned to them, and let's suffice to say, I'm going in at the end of the month to sign an agreement for them to place straight away the in-ground gold token. So the response has been huge.
Amazing.
And that's before, to be fair, that we've really gone to the retail side. And that's the other really amazing part, is the fact that even in the retail world, we're providing now democratized access for people who potentially would never afford to buy an ounce of gold, but could afford to buy, one gold token, which is priced at 10% of the spot price. And of course, that's a risk mitigated process and a calculated process, economic model around how we've priced it. But in terms of the appetite, yes, we would argue that that's a marketing challenge for us. But I would also say, and it goes back to what I spoke to before, you've already got institutional and capital markets already purchasing ETFs and
Right.
gold tokens. They already have digital money. They already have, like SocGen in France has already got Forge, which is a complete digital assets component. Nearly all the banks have digital asset, individual entities. Their mines are already there. They're buying ETFs for Bitcoin, for example. So this is another asset class that's going to move in and be plonked right in front of them. The value proposition, and this is one of the things that's really special for me, is I'm always called an ecosystem design thinker. This is an ecosystem. It's not one entity doing everything. We have moved, and this is the
Yeah,
opportunistic time for us. We've targeted the fact that 2026 is the growth year for real world assets. We've nailed the fact that it's the first regulated entity out of VARA, and TokenVest has just tokenized, the world's largest bar of silver and a whole range of other firsts. They are world class. They are the best at what they do. We've now got the largest brokerage company wanting to place and subscribe for the in-ground token. We already have the structured financial products that if we want to wrap some of these tokens in a traditional AMC that makes it investable for central banks, and make no mistake, the Asian central banks are growing their assets of gold at an astronomically fast rate because they see it as a economic stabilizing asset for their currency and their economies. So the demand side from the purchase side is super strong. Every time we have a conversation, people just go, this is amazing. But it is because it's the perfect storm. It is not because we are sort of playing in that low-hanging fruit place, that stage. We are really working with both retail and commercial. And of course, then you bring in your retail aspect of all the different generations that are loving real world assets and crypto and digital assets, access to, for example, having these assets listed in traditional crypto exchanges and crypto wallets and those sorts of things means that people now have access to a commodity class as a real world asset. So the response on the purchase side has been just as great as what it has
it's
been
awesome.
on the
It's
land
awesome.
side. But it is a perfect storm. We'll have people that'll be the naysayers and saying, oh, yeah, this has been tried before, but they haven't had the perfect storm that we've got. And also the smarts to
And
make
the
sure
complete
that,
solution, the complete ecosystem. Before it's just,
yep.
hey George, just tokenize the gold you have in the ground, and let's go out and let's see if we can find a bunch of people around the world who give us money. It's very sloppy. It's very let's get rich quick. Is very I mean, I remember talking to one company saying, hey. This isn't a Solana token. I can go launch a token on Solana in 5 minutes. This has got to be, you've got to have compliance. You've got to have so many things. And I think that's why they all flopped up until now. But
Hmm.
this is okay. Now people, if I had to guess, people are watching this video, listening to this video next couple of days, and now they're thinking, okay, Lisa, when? So what does the cadence look like? Because obviously you're having all the conversations with the gold holders, with the gold owners, with the investors, with the exchanges and things like that. Give us a cadence now in 2026 of what that rollout looks like. But and I'm not going to hold you to exact dates,
Hmm.
but ballpark, because obviously now you're rolling this out. What does that look like? And for the retail investor, especially, when will they get a chance to be able to buy the in-ground token?
Well, I would say that I was going to say Easter, but Easter's April. So I would say that's an Australian thing. We say Easter, but April I would say will be our pretty much base, line in the sand, if you like, for our token generation event to be conducted by TokenVest, our regulated issuer. And of course, retail sales will happen through them shortly after that. So I would say April. We've still got some work to do because it is a regulated space. So we have to work with TokenVest to ensure that all the attributes of around the goal and the verification and all the requirements that are required by VARA to sign off on our asset as being legitimate and meets all their requirements. But we've got a lot of work to do between now and then in that regard. But we'll work with TokenVest on that. But we do anticipate April to be our token generation event where 1 billion in-ground gold token will be generated. Now it sits in an escrow pool. It doesn't get released because it can only be released with every ounce that we procure from our site programs and give to our issuer to monetize and back those real world assets. As we provide them gold, those assets are released and can be allocated or sold by token vest. In terms of our, commercial offerings, we're already having pre-release discussions now. Our first mover offering has already been available since the 1st of January. It lasts until the end of January, the 31st. And we've made
That for
9,000.
retail also, high net worth, or just institutions and
No,
large?
it can be institutional or professional. Yeah, so they'll have to meet the requirements as would always be the case of the SAFT agreement. And we've got 9,999, and clearly that's because that's the purity of gold. So that's the reason that we've done it. And for the first mover, they get an additional 50% tokens. It's always the toughest. The first person never wants to put their head over the line, the finish line. But it's a really profound offering for the first mover, and we'll have that finalized probably within the next week at least. After the 1st of February, we've got 20,000 more pre-release in-ground gold tokens available. Some of those will go to gaming platforms that we've got partnerships with, because we really want to spread the word, if you like, amongst the variety of different
Gaming? How does
investors.
gaming come into this, Lisa?
Well, people can go through games and start digging for virtual gold, and they can win, of course, and pay and earn in terms of loyalty programs and
Unbelievable.
assets from this. So, you know, one of the things most people don't know about me is, well, there's many things that people don't know, is that I was involved in writing terms and conditions for My Neighbor Alice and Sandbox and so forth. So, in those gaming environments, people go into virtual land and they start digging for virtual assets. Well, they don't actually have to dig now. They can actually start to earn from undigging, if you like, or not mining, even virtually. So they'll be using those assets to get the message out there in a democratized way. Is amazing. So you've got a whole different generation of people. What is important is that new investors, whether they're new market participants to gold or existing investors, are without a doubt expecting ESG metrics to come with any investment. And of course, this is the perfect opportunity for in-ground gold, because we do come with not just the metrics, but the actually fully capitalized, developed programs that come as a result. And that's one of the amazing things for me, is that through the distributions from the public sales of our tokens, a portion of that distribution comes back to In-Ground Inc., the company, and we fully capitalize the development of alternative land use. Now, for those that know startup world and innovation world, any program that has to try and chase, startup capital, it's like giving your right kidney and your left leg. These are fully capitalized programs from day one. The distributions pay for the development of the early stage and the development of these land programs, and build, you know, waste to energy plants and develop carbon projects. Anybody that works in the climate space will know how hard it is to get that sort of development money. Our model, there's enough distribution to pay for that development straight away, immediately. And they start with feasibility studies and off they go. So I think this whole ecosystem model about providing revenues for stranded assets for the miners, making sure that it's valuable for the in-ground gold investors and the additional distributions from ESG and climate, but also the fact that we're creating a whole new economy around all new alternative land uses around the world for some of these mine sites is mind-boggling. Now, people say, is it too good to be true? No, it's not really. It's just a perfect storm, because money generally is the issue why these things don't go ahead. And gold has the attributes that are just absolutely perfect to encouraging investors to invest in gold that stays in the ground.
Consider myself pretty entrepreneurial, pretty cutting edge. Gorecom's always been the edge of all new emerging technologies for the issuer and small cap public company space for the last 28 years. And I got to tell you, this model blows me away. It's not something I don't think I would have ever conceived of in trying to solve this problem. That comes from having smart people at the table. And I would love to talk about your whole team, but maybe we'll talk about that another time. But you're the CEO. And when I looked at your resume, and anybody who's been watching and listening to this knows that you are incredibly intelligent and articulate. We're not just saying that. I'm not just saying that because you're on the screen with me. If you weren't, I wouldn't mention it. But anybody watching or listening, I mean, you articulate everything perfectly. Everyone understands it. It's unbelievable. And then look at your resume. And if I was at the Oscars trying to read off your resume, they would music me off with trying to get me off the stage. But essentially, I would sum it up. I summed it up in my notes. Yeah, you're an award-winning top 20 thought leader and influencer on blockchain, ESG, edtech, digital assets, founder, CEO, advisor, professor. I mean, you're unbelievably well accomplished. Are you how did you bring this all together, Lisa? Has this been something that's been a dream of yours for a while? Has been something you've been contemplating for a while? But tell us about your skill sets and how, a lot of these RWA is just entrepreneurs, and you bring so much more to the table. How big of an asset are your skill sets to making this succeed, not just in 2026, but right through for the next 4 or 5 years and beyond?
Look, I would say I can never do it on my own because we obviously do have an incredible team. David Lukacs and Lynn Comiskey, who are the chair and obviously the chief compliance officers, and obviously, my husband and team and all our advisors and network are incredible because we need them to get the program out there. But for me, yes, it is a perfect marriage made in heaven. I mentioned mining. I go back to my days of working with Ivanhoe Australia, one of the world's largest exploration companies, who, of course, was taken over, and it became Inova, and then it became Chinova, and then it left Australia. And I worked at the time for two very dear friends and colleagues that I still stay in contact with to this day, Simon Lever and Mike Spreadborough, who were the CEO of that company, and we reported directly into Rio Tinto. And one of the reasons I was brought in was to write the major operational hazard standards for a retired site called Mount Osborne in the middle of godforsaken nowhere in Queensland. And that, to me, I look at that site now and go, some of the challenges that I had around that environment where they're using existing infrastructure to try and monetize other assets that they'd found on the site. So to me it really resonated. I've worked with the biggest mining companies and written their management systems and know their systems, not just from the getting the stuff out of the ground. And I do have a degree in geography as well. I know it's a bit weird, but my first degree was accounting and financial management and geography, and people used to say why, and I'd say because I love it. And I'll never forget sitting in the SSE's office, and he's looking at me thinking, oh my God, what has head office sent to this site? And he starts telling me about how they're going to get the gold out of the ground. And I asked him a really intelligent question. He went, how did you know that? And I said, because that's what my passion is. And so knowing that, I know mining, but I know economics, but I know innovation. And so many people would have argued over the years that I would be considered a generalist. You can't possibly be good at everything that you do. Well, one of the things that is really important to me is my business and my consulting arm, if you like, is called Arate Business Performance. The word Arate, as you and I, George, we've talked about this, is a Greek word, and it means
Yes.
excellence of all kinds. It doesn't mean excellence in just what you do. It's how you think and what you produce and how you respond to innovation and all of those things. But for me, I've also lived on the premise that I will never say something I can't prove. And so when it comes to innovation and these economic models, I have to make sure that I'm comfortable and I can prove it and I can do all the economic modeling and I can do all of that and pull it all together. So for me, this has brought together my career, nearly 40 years within the mining industry on the ground. So I know this stuff. I'm still, still involved in that space, and I still watch the pricing of the metal, and I still understand it and the difficulties of that. But it also brings in my economic and accounting career. It also brings in my innovation. It brings in education for me. And I know David Lukacs goes, oh, he recoils at that. But I go, no, education is not university-based education. It's learning about how these models work and explaining it in ways that people can understand. And I'm a weird beast because I do have a formal background in education. And I wrote all the compliance programs and the management programs that are still used around the world for mining. So I know how they work. And then when it comes to blockchain, I was an early adopter. I wrote one of the first tokenomics models for mining and aged care back in 2014. And I saw the tokenomics models as ways of democratizing access to wealth and also making it better for the
Right.
participants, the miners, the companies. Instead of trying to denigrate them and knock them as, people that damage the earth and so forth, try and work with them to make it better. But money is the underpinning thing that makes that world go round. And so, you can see on my screen my hashtag crypto auntie. I secured that from a very dear friend who was one of the co-founders of Swissborg. When I was at an after party at Swissborg, he actually wanted to call me crypto granny, and I said, "Can we please not call me crypto granny?" And crypto
I
auntie
know.
has
By the
stuck.
way, there's a crypto granny in Dubai. I don't know if you know that, but
Yeah.
she's much older
So
than you.
Well, I do have grandchildren, but I didn't want to be known as that. So, I've played in this innovation space. Been through the whole craze of this. I've seen the ups and the downs of the innovation curves where the good player, everybody comes in, lots of people do things, not everything's right, it doesn't work, some leave, some come in. For me, this is perfect because I see in terms of digital assets and crypto assets, we've passed that curve of defiance, if you like, where we're really starting to move into that compliance and regulatory space. I'm seeing the same with real world assets. I'm I've gotten myself to a place now where I know the best in the world to do these. So when I first met David Lukács, the first thing I said was you need to meet Scott from TokenVest because they're the only one that I'd be using to do the tokenization, and these are the reasons why. But at the same time, I've been working in this climate space around trying to drive institutional capital into investment class assets and new asset classes that are uncorrelated and diversified to give
Yeah,
them a
that's
better,
the genius.
that they're squeezed out of some of these markets because people don't understand. They don't understand that these are risk mandates that our institutional players have. So you have to look at this ecosystem from the perspective of how do each of these benefit, and how can I create a model where each of those get what they require and the money actually then circulates around to produce an incredible benefit. And for us, the key is obviously stranded assets by the mining companies, and the fact that gold has a certain level of attribute around economic stability, store of value, and it's not like it's new. It's been around since time has existed. We've been asked questions, and we often do, and they're often, throwaway questions, but they're questions where people say, "What if gold goes down?" And we go, look at the history of gold since time started. Look at the history of gold growth in the last 40 years. Will it have dips and rises? Yes,
Of
but
course.
it's continued to grow. There is no question that it will continue to grow. And so, I think for me, it is that perfect storm. My ability and skill set is certainly, I suppose, quite unique in the sense there's not many people around that have, education, accounting, climate, geography, and be one of the world's leading experts in blockchain and real world assets around, I suppose. So you would call me a generalist, but I'm pretty proud of the career of where I've gotten to. So for me,
I'd
it's
call you I
amazing.
I'd call you Elon Muskish, where you're able to do freakishly amazing things at high levels. And I'm almost wondering down in Australia, do you guys get 34 hours in a day or something? Because I don't know how you do it. I don't know
Well,
how
well,
you
I am
do it all.
Australian but live in France. So some would argue that, I get an extra, if I'm working in Australia or working in Toronto, I get somewhere between 11 and 6 hours extra in a day. So, potentially you could argue that. But, I look at, one of the most amazing moments for me, I suppose, is my dad who passed away last year. And I, he was just my absolute idol. But he was one of the very early investors in Bitcoin at 90. And if
Look
I
at
could
that.
explain it to my dad, who struggled to remember his PIN number for his card, and yet he was investing in Bitcoin, it makes it an easy conversation because I put logic together. I go, right, well, it's pretty logical. The shift in mindset is if I've already got institutional investors and they're already playing in this digital space, they're already putting money into EDFs and they're purchasing physical tokens, and every transaction we make financially is digital because we don't physically see. I don't physically see a truck of cash sitting out the front when I got money in the bank. So to me, it makes no logical sense to say why wouldn't I invest in ground gold? It makes no sense,
When I first
provided
heard the
it can be
concept,
verified.
Lisa, I was like, what? I'm not sure about this. I don't, and now, I mean, you guys have won me over, and look, this is the first interview you and I have done, and we're gonna do
Yeah.
many more. And I've really gotten to know you now over the last, several weeks. But I can tell you already from doing this for 27 years and thousands of interviews that your combination of brains and boots on the ground uh, easily puts you in the top 0.5% of executives and leaders that I've interviewed. And it's thrilling to me because it's great to see brand new products, brand new solutions with new technologies marrying old fashioned industries. I think this is just amazing. And I think everybody who's watching or listening to this can't help but be excited by what they've heard, what they've listened to. And I can't wait to have you back on as soon as possible because there's going to be a lot going on between now and April, right? And
Yeah.
but congratulations to you and David and the team to what you've brought to this point. It's simply amazing, and I can't wait to have you back.
Thanks, George. I really appreciate it, and I can't wait either because I think there's so many elements and nuanced elements that people will ask us about, and I've got an answer to how we price it, where's our market, what are our competitors, all of those sorts of things. And I do fall on my sword on that. I go, well, I won't ever say anything I can't prove, and to me, that's the thing that really is the core thing for me. So why am I here? Because this is such an easy one to do. This is such an easy proof case. So it's good. I'm looking
Well,
forward to
I
it.
hope you don't lose very many friends in the next 4 months because you've grown up with all these majors you've in your career. I mean, and you've mentioned some of the big companies, but you're now going to be competing against them almost. So hopefully they're going to look at you as a friend and say, you know what, Lisa, we'll invest in you that way
Yeah,
because we
well,
love your
I
model.
I agree, but I think about it. Look, I've had lots of discussions about this over the weekend because I laugh. I'm just finishing off completing what I would call the Chinese menu, and I do like to make some jokes. I'm an Australian. That's the Tam Sam Som. It's the market analysis of our work, and I just call it Chinese menu because it sounds easier to say. But if you think about this, even if I was a tier one, I don't see ourselves as a competitor. I see us them, thinking, oh, this is something to watch. Because we'll be a unicorn in the first 6 months, and there's names for every
Wow.
bit after that. But if I look at a senior and I look at some of the people that I know in the Rios and the Extratas and the Newmonts and Newcrests and Barracks and so forth, and I go, right, they have a percentage of land that they own as well that's got mineral resources on it. They've got lots of headaches. Doesn't matter whether they're a tier one or a junior, they've got the same headache of getting this gold out of the ground. If we don't need the volume of gold, because we've got 50% more gold sitting in vaults, and we're either wearing it or storing it, that we're not using it. We're just using it as a store of value to back assets. If I'm a tier one, it makes absolute sense to me to go, well, actually, we could do the same thing. Actually, we would lose our headaches. We wouldn't actually have to worry about paying bonds. We wouldn't have to worry about environmental protection of the land that we've got. And actually, instead of just monetizing the stuff that's in the ground, we can do other stuff. Now, it could be, somewhere in the middle of Central Australia. It could be somewhere in the middle of, the Amazon that are absolute climate and opportunistic hotspots to produce and do something else with that land. So in terms of tier ones, I don't even see them as a competitor. I see them as oh, that's something to watch. We should probably think about that because I could take a lot of headaches off my plate if I was the CEO or a board, if I didn't have to worry about environmental challenges and climate challenges. And I could make greater distributions as dividends to my shareholders. And that's the thing that they're focused on at the moment.
Wouldn't that be? And you know what? It doesn't sound like you're that far off. It sounds like it's exactly what they may end up saying. You know what? We could get rid of all these headaches and still deliver the same kind of value we're delivering without all these headaches and without all these regulators, without all these things.
Mhm.
And when you say you're going to be a unicorn in 6 months, hey, even if you're a unicorn in 16 months, I think you're on your way. And I can't wait to grow with you. And I can't wait for you to show us more and more of this plan in 2026. So Lisa, thanks for joining. We could talk for another hour easily, but this has been really exciting and best of all, Lisa, really informative. Everyone watching and listening totally gets what you're doing. You didn't use any technical jargon, you didn't use any Web3 jargon, you didn't use any
No.
geology jargon. no environmental jargon. It was just, I mean, everybody understands it, and I hope they're as excited as I am. And thank you for joining us today.
Thanks, George. Talk again soon.
For everybody at home, thanks for joining us. Looking forward to your feedback on YouTube and other social media channels. Thanks for having us. Have a great day. See you next time.
Hey, small cap fam. I hope you loved this interview because more than a dozen people were involved in its production for the sole purpose of making you happy. If so, can you take a moment to support both our awesome guest company and Agoracom? Your engagement means the world to us. First, if you enjoyed this video, give us a thumbs up by tapping that like button. It's a small gesture that helps this interview reach even more potential investors to discover today's guest. Second, we would love to hear your feedback on this interview, so please leave a comment below. Be sure to keep it clean, but feel free to poke fun at George. If you loved what you heard on today's video and want to dig into our guest company right away, take a look at the links in the description below. And while you're at it, hit that subscribe button and ring the notification bell to never miss another great Agoracom small cap video. Thank you so much. We couldn't do any of this without you. Make sure to come back soon.